Media reports say that PetroSA is charging Eskom high prices for diesel. Eskom uses the diesel to power some of its power plants to help mitigate against load shedding. Last year, the power utility indicated that it has run out of money for diesel but had to source it to reduce load shedding. But PetroSA says it started to lose money due to lack of consistency in the quantity of diesel that Eskom requires, and that the last-minute request for diesel is contributing to the high prices it is charging Eskom.
Eskom comes in February, they require volumes within 48 hours. And if the markets are rising in the month of February, PetroSA cannot be in a position to sell to Eskom at M-1 because the real price is the spot price. So the market is such that it punishes you for not properly forecasting and planning.
The company says it has requested a 3-month forecast from Eskom on the supply requirements, but this did not materialize due to, among others, financial constraints. It says a forecast will enable it to source diesel economically and supply it at a better price to Eskom.
We had a meeting with Eskom after PetroSA has realized that over time, PetroSA was losing money. Remember that we're working in what we call a highly volatile market, especially after the Ukraine and the Russia situation. Markets started rising and rising and rising. So, prior to July, the supply was very constant. So Eskom was just lifting according to our planning. And then there's something changed in July. Burn rate of Eskom actually increased. So historically, we were supplying them with 1 million liters a day. So after July, that thing actually changed from 1 million liters a day to 3 million liters a day.
PetroSA says for it to offer better pricing and have constant supply, it needs to have long-term agreements with the refineries in the Middle East, and that this is likely to guarantee constant supply and better pricing for Eskom. Naledi Matlapeng, SABC News, Johannesburg.